The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
You traders and traderettes, it is time for another wonderful edition of the Power Trading Hour here at the TFNN studios, where you can see my bright and shining face and have just another great day here at TFNN. Of course, depends on which side of the bear bull battle you are on, but I think you can have a great day anyway. We'll get a little bit more into that in a few minutes. But for the most part, when we look at the markets out here, let me update those just a second, just make sure I have them right. Okay. And yeah, we're up 20 points on the S&P cash. We're on that and up on that with less than 2 billion shares as we start the show. 1.9 billion shares now. So we are certainly in the range of going to higher highs on lighter volume for yet another time. Now, we get into a bullish bias here very shortly that typically starts about the 15th of December. It might start a little early if we have a lot of shorts in this market, which I don't. Just the reaction, the way that the market went up today, the low light volume doesn't make me think we do have a lot of shorts in the market. I know the bullishness bear to bull ratio is as high as it was in 2019, September of 1998. It's around historic highs, and of course the inflows. Somewhat questionable if you look at the trim tabs data. But we're at we're at 1805.77 on the S&P cash. And of course, we're going to see how the volume comes in at the end of the day, because that's pretty much the last 30 minutes have been the most important moves in this market. Had a lot of volume come in just at the end of the day yesterday. We're starting to see a great deal more than trading pretty much market on close orders coming through. I had 3 shorts. I covered 2 of them this morning. And, of course, if you were following me through the week, I said that I would not be short the indexes. I would be short individual stocks. One reason was I only thought that we had probably 1760, 1750 as a downside target between now and Christmas. So not a whole lot of risk reward there. But a lot of stocks having weak days today, and we'll get into that in a few minutes. But we don't have to go any farther than companies like Apple. We had John from Philly call me, and I didn't have time to get the clips, but I'll get them over the weekend and play them on Monday. He was asking about whether or not Apple could easily enter the marketplace of China and quickly. And we were talking about towers and other equipment that they'd have to put on those towers to get the internet speed up to enjoy a real 4G experience in China. And it was, I knew that they were kind of stuck most places on 3G, but there was a good interview on Bloomberg last night, and it may even be worse than that. It may be 2G in a lot of places. Anyway, I'm going to re-watch that interview with the analyst on all things mobile phones in China. And I'll grab some clips and make some more comments on Monday. But it's probably even a little bit worse than I thought when I made those comments to John in Philadelphia. I think maybe those interviews last night may have helped shape Apple's down move today. Not a lot of volume, but of course, remember, this is a down move in an up day for Apple. and especially on the back of kind of a intraday reversal yesterday, higher high, close lower, pulling back yet again today. Of course, I'm not trading Apple. We need to watch it. It's still the single biggest mover of the NASDAQ index, but it will be interesting. Bloomberg West last night. I don't know if Z, did you actually see that? Maybe he can IM me in the den, see that interview. But we'll take a look at that. Oh, it did not. Okay. Well, I'll talk about it again on Monday then after I watched it. There's some reading I need to do a little bit more on that. But Apple down a little bit today, not so strange. Anyway, I was talking about my positions. I was not short the indexes, nor would I. But we've got this bullish bias that is coming along. And if you look at it, it starts pretty much on Wednesday. This is a late expiration for December, but the Wallenchuck Wednesday, where market makers go delta neutral, that's where they pretty much take positions that will expire in the next week to 10 days and even them off. So if anything big happened, they would not have any big wins or losses. A lot of times they will pare down their positions. The volatility for the options and the premiums you get are probably too low to accept the risk of just a few days. So they'll buy positions, they'll hedge positions, they'll buy and sell futures to get the volatility down. There's normally a 1% bias 80% of the time. That means that normally you're going to see from the 11th next week to the 20th, most likely 80% time a higher close than you will see on the 11th of this month. Especially in December, it is about half that statistically, so maybe a 0.5% higher than we see here today. And that would not be uncommon. I could see trying to bore the bears out of existence and just slowly, drip by drip, doing it. What I can say is that what we see today, and a close above 1,800 on the S&P cash, would probably confirm that what we're going to see is a just basically a waiting game until the probably the 2nd of January when we come back for trading. It's going to be a very quiet, very muted trading, I believe, probably the rest of the year. I think we've seen the big move of the year. We're probably going to see a few points up, a few points down, a few points down. It's all going to be individual stocks for the most part. If you believe Trim Tabs and some of the other folks out there, the funds are throwing everything and the kitchen sink to basically keep their stocks pretty much where they're at until the end of the year. The fund flows from retail investors seem to be very muted and even pulling a little money out. The money that's coming in that's non-discretionary, 401ks, that kind of stuff, they're not waiting to spend that money. They're spending it right now. And the thought is that, like window dressing, all they want to do is run out the clock until the end of the year, which makes me think of the year 2000. In 1999, we were going from a, 35% cap gains rate down to 15 or something, whatever it was, 28% to 15. You couldn't find anybody in a winning position that would sell any stock for any reason. They knew if they just waited a few days, they'd get right into it. The problem was that everybody came in thinking the same thing. So January 3rd, when everybody came back in 2000, everybody was loaded for absolute bear, and it didn't take a few minutes before everybody was selling everything they had. And well into 2000, we saw the huge sell-off, especially in the NASDAQ. 25 of 50 companies that were the majority of the NASDAQ at that time made no money at all and had never made money. So we had a really balloon of a stock market coming into low taxes, and we found everybody firing away coming in January 3rd. The question is, will we see that this year? And I think we're going to have, as we get closer to the next Fed meeting, I'll look it up during the break, I think what we're going to have is this very, very light volume, very light drift, maybe higher. Maybe we close out the year at 1830 or something on the S&P cash, or maybe 1815 or something. I just don't see any upside, and I don't really see a lot of downside for the broad markets. I do see a lot of individual stocks with individual reasons for them to move fairly strong, and especially in a market where not much is going on. It is not uncommon to see a lot of markets or individual stocks move very strongly on news because they're the only thing out there. All the traders and traderettes will hop on to anything that's moving as they grow more and more bored over the next couple of weeks going into the end of the year. So just keep an eye on that. But my guess is that we probably have seen the big move of December, and probably going to be seeing a idea that if we are going to see selling by Fed tightening, that I think we're probably going to see everybody come back the first or second of the year and fire away. It's hard for me to see the money coming in from funds, discretionary funds, all being used in the last few days, according to the inflows. And if there was any reason other than to keep the market up and run out the clock till the end of the year, many of these people are paid at the close of business on November, the last day of November, and to a lesser extent, probably 30-35% of the fund managers are paid by the year end. So we will keep an eye on it for you and let you know how it's working out. As far as movement, 1805 on the S&P cash, and we're just still under 2 billion shares. So it's going to be a very, very light market. Kind of, if you are short now and you're short the indexes, probably not a good opportunity to make a lot of individual money. My guess is that you're probably going to see traders move more into commodities and less out of at least the indexes, and more into commodities and more into individual stocks. I actually have one stock that I'm still short. It probably was the best of the three that I put out short. The other two, like I said today, I covered this morning with, they were flat. And I think it's up 1.8%. One is up 1.8%. The other one's up 0.5%. The one I'm on was down 1% yesterday, down another percent today. So I think there's opportunities, but probably in individual stocks. Give me a call, 877-927-6648, 877-927-6648. Give me a ring.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back again, 1805 on the S&P cash with just 2 billion shares as we go through the day. Of course, we've been slowly creeping up for the last couple hours or so. So, 1 point every hour or something, every half hour, something like that. Not a lot of movement, but very interesting to see a market out here moving as it is today, going into the end of the year with extremely light volume. It would be nothing to see this thing close a point or two higher all the way to the end of the year as shorts slowly exit their positions. It's hard to think of any kind of news between now and the end of the year that would move this market higher and or lower. So probably going to be watching individual stocks and zoning into those. Again, I didn't have any shorts or longs in the indexes, thinking that individual stocks probably offered a better way to make money as we get into thinner and thinner trading here until the end of the year. For my shows, it's not a time to just go hike off. I'm going to be spending a lot more time working on some of the books that I've read, some of the lessons I've learned, and incorporating them more into the show over the next few weeks. as, of course, it slowly comes down. I'll be leaving, when is it? I'll be out of here for the last couple of weeks. See what my last day is. I think it's the 20th. I'll be gone. Yeah, I'll be gone the 20th and be back the 3rd of January. So we'll see how that goes. Well-deserved vacation. Okay. Wanted to get back to some of the things I was looking at. And we'll look at some of the movers out here and see if we have anything actually maybe setting up for a trade. PH. Get on my list here. Parker Hannafin. And this thing's bouncing up here. Let's take a look at the volume, though. Okay. The October 22nd high at 116.26, 2 million shares. Like a lot of these breaking out, doesn't look like it's going to come anywhere close to 2 million. We've got about 750,000 shares, and that's going to be very interesting. Let's get this down a little bit more, but maybe we can just look at a shorter time frame here, maybe 3 months. Yeah. You basically had that real strong move up there, and since then, just not a whole lot. But we'll continue to take a look. At least that's one we want. BSX is the next. And this one's kind of doing a poly trend top. If you would kind of think of a contact lens, kind of a nice little dome out here. Certainly looks like Boston Scientific is setting up a little bit of a what they call a poly trend top. This does have high volume that wasn't exceeded from August 1st. Had 34 million shares and really never was able to beat that. And that's when you get into these, even in a bull market, with a lighter volume, a pretty good sign that you're not going to get that much more. You had, is that right? You had a lot of volume in one of these days, but it didn't go too far. And you had, it's actually a down day on the 24th, had 44 million shares. A little bit more strength in. Tried to get into it today on a little gap up, but you're going against that 44 million share candle down day with 7.3 million shares today. So a little bit of weakness out here. INFY. And this is interesting. Infosys. INFY is a symbol on it. This thing's trying to get back to its high. Looks like 55.80. So it's broken it today on the high. The February 25th high, $55.71, 4 million shares. Into 1.3 today, is that right? Just a million shares today, actually. Pretty weak. Weak. Wimpy. We'll be back in a minute. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, you can always give me a call at 877-927-6648. Normally you can email me, but I'm not at my trading station today, so a little tougher, but I'd appreciate your call. Maybe you have something bigger to think about. In the 4 o'clock hour, I'll be joining Tom after the first break. We'll be talking technology, a lot of stuff going on out there. I'm going to drone on and on. Maybe that's a hint of what we're going to be talking about, at least a little bit today in Tech Insider, but a lot of interesting things going on. Thank you. I'm getting shots from the peanut gallery right now from the engineer who will remain nameless, and but his name is Alan Hubble, because he's got the optics of a telescope. Anyway, I want to look at next. I wanted to talk a little bit about gold. I have not been bullish on gold, and you look at the charts and they're there. And it's something I'm probably going to try to talk to Andy Heck about next week, and that is the underlying psychology of some of these very thin markets that are heavily traded by retail traders. Normally you don't find people in cotton that don't know a lot about cotton. You don't find a lot of people trading hog bellies that don't know a lot about hog bellies. Most of those people tend to be rather professional traders. And in gold, well, probably a little bit more. I brought it up before, but if you go gambling in Las Vegas and you play wildly without a lot of thought or preparation, they'll call you a donkey because you're just doing nutty stuff, and you can wipe people out, especially in tournaments. But of course, you're never going to win the thing if you act that way. But they'll say you're playing like a donkey. And my guess is that, especially with as narrow as the entrance and exits of gold are, and just what a very small sector of the general market it is, and probably the high preponderance for retail traders to trade it, maybe there's a little bit more influence in the psychological side of gold than we would see in most everything else in commodities out there, especially since it's got so much interest with people in that area. Anyway, looking at the chart out here, still don't see anything out here. This thing really, or at least gold was moving pre-market. I think it was down to, what, 214 or something like that, 215, 217. I forgot exactly where it was up. And then it was up, 240 or 1240. Pretty much settled back down. Not a whole lot going on. But where is it at right now? Let's take a close look. It's off 750. Pretty much around that 1224. Is there a lot of downside in this market? No. Could there be more downside, not in the metals, but in the actual miners? And I think yes. One of the things is the absolute belief that this will be a V bottom in gold. And I'm not so sure about that. Of course, for those that haven't been around TFNN forever, I can remember when we first started looking at these gold and the movement in gold. At that time, my friend Tim Ord, he'd been talking about gold for a little bit. And I think we were playing, trying to remember what it was, but it was like when a gold stock went from about $2 to about $7 in about 2 weeks. And everybody thought they were geniuses. And of course, trading gold ended up being a lot tougher than that. But normally, after you've been in a bear market for something like 12 or 13 years, as you had been in gold, it had built up the energy to move higher. Same thing that we're probably going to be seeing in other markets. But the belief that this thing has to just instantly move up or down may need just some sideways movement for a while, especially if we are just above the cost of production on gold. Why can't this thing bore people out? I'd love it just to not have any phone calls for a couple of weeks. Everything get nice and quiet out here, and see a nice little movement in gold off the bottom when no one's looking. And maybe it is that pot that doesn't boil because everybody is staring at it. But somehow I have a feeling that either we're going to have a huge move down that is a scary correction, or maybe this thing just goes sideways for a while to bore everybody out. But I'm just thinking we may be another 30 days looking at gold. Maybe the beginning of the year is where this turns like the general markets. But what can you say? Again, give me a call. It is a quiet day out here. 877-927-6648, just turning 2.1 billion shares. I am going to be harping on this till the end of the day just because it's so light. There are certain periods of the year, and it used to be like clockwork. In 2000, 2001, 2002, 2003, 2004, 2005. And that was you'd get about, 15th of August, and volume would just continue to drop and drop and drop and drop until we got back first weekend in September. That pattern started to change. I think there was an organic reason, mostly because schools started moving up the start times earlier, and you started seeing lighter volume in around the 1st of August. It never got to the same levels it was in the first 5 years of that decade. But there was times when you'd be seeing 2 million shares on the exchange traded was in a minute was big. And of course, now you see 10 or 20 million shares a minute, no big deal. Even with us trading lighter volume out there, it's never really returned to those kind of super low levels. We'll probably see those kind of levels right before the end of the year. Probably what it's going to be this year, 31st. So you're probably going to see that, right after the open. You probably see a few people going out. My guess is that the best plays are possibly going to be options positions, and that's probably what I'm going to be focusing on my daily newsletter and in the Tech Insider for the first part of the year. We're seeing and continue to see things like the VIX drop, and if we can get just a slow, very quiet move back up, that VIX is going to drop. Options are going to be incredibly inexpensive, probably much better to play the options than playing the individual stocks if we're going to see that change at the end of the year. Let's go back and look at a few of these others. Was looking at lumber liquidators. I don't think I brought that up before the break. Let's draw back here again. There you go. Lumber liquidators. This thing's up, but again, not a lot of volume. One of the bigger movers out here today. You're basically just getting back up into this heavy downdraft candle from the 22nd that had 3.7 million shares. We have a lot of people that follow this. Up above 105 here today, but just seeing these kind of light volume moves out here. Anyway, we're going to go to Ernie from Orlando. How you doing, Ernie?
I'm doing fine.
Okay. What do you want to talk about today?
I'd like you to take a look at Orvina Minerals. They just reported today.
Okay.
And it looks like the stock put in a double bottom, confirmed double bottom, tested on lighter volume. And stock is a gold, silver, and copper producer with two mines, one in Peru and one in Spain.
Yeah.
And it made a 6-cent profit.
Yeah. This thing trades way too low volume for me to ever actually own it. This thing is, trading 100,000 shares today, and that's a big day. So my first comment would be that you always see during the presidential elections, they always have the polls, right?
Right.
Okay. And they'll ask 1,500 people, who are you going to vote for? And they'll say plus or minus 5% or 4% or 2% or whatever, depending on how many people they ask. Well, I kind of look at these stocks without much volume the same way, which is, they're asking 50 people. I don't see that I can get that much of a clue in price and volume in what these things are going to do when you get one day with 100,000 and the rest of the days, if you had 1,000 shares, it'd take you all day to sell it. So,
well, most of these stocks are the ticker ORVMS is the U.S. symbol. The Canadian symbol is ORV.TO. So the Canadian stock, most of these gold stocks trade more shares on the TSX.
Right. Do you know how many shares that is actually trading these days?
I think 10 times as many shares on the Canadian exchange.
So maybe 1 million a day?
Yeah.
Okay. I don't know a lot about this particular company, that's why. But that's when I look at something like this, start thinking, I don't know about that. I'm just not a big fan of trading a lot of stocks on either the Toronto or Vancouver exchange, but can you find a low out here? Maybe. I'd still wait probably, I'm going to say probably before the first of the year. I think right now is my belief on any of these gold or silver stocks. I think maybe these things are probably going to move with the market, but I think the market's going to move slowly up, and I think gold and silver probably going to move slightly down and slowly into the end of the year. I don't think that there's probably a lot of money to be made on these until you get some kind of signal out here. And that would probably, even if you had volume on this, would be the biggest problem. I'm still watching for some kind of blowout low in gold and silver and commodities. And just not really seeing it right now. So, I mean, are you hearing people, I take it you're from Canada, right?
No, I'm a Floridian.
Okay.
I'm local, yeah.
I was going to say maybe some of our wonderful Canadian traders can call in and tell us what they're hearing up in Canada on some of these things. But is there really, I haven't heard it in restaurants. I haven't heard it anywhere else, and that is the whole, I got to be buying gold, I got to be selling gold. I noticed that I drive by about 3 gold places that would buy your gold, and they've always had people out spinning signs and all that kind of stuff. For about the last few weeks, those guys have been gone. So I'm wondering, if this isn't a prelude to the vast majority of people looking the other way when gold truly bottoms. But I just don't see that kind of built-up energy yet that I was talking about previously in the preceding segment, of people either, one, bored out of their skulls about it, or two, scared out of their skulls. I want to see that. I want to see bored or scared. And I don't know if you would if you would give a grade on bored or scared. How do you feel? Like in a number like 1 to 10 right now.
I've been methodically buying these shares because they're fundamentally undervalued. So.
Okay, so it's more of a fundamental call with you. Yeah, I don't think I don't think you have that much downside. I just think that you could be shook out fairly easily just because of the one huge spike down. And I was lucky enough to buy a couple of these huge spikes down, and I think it's pretty much trained me to know that the big money, even if I don't get it, is waiting for that huge spike down. So I'm going to sit on the sidelines, wait just a little bit longer. When I buy gold, it's going to be probably for 2 to 5 years for the next big run. And
I think the most bullish thing is that talk show hosts like you are waiting for that spike down when the bottom's already happened.
Well, that certainly could be true. Of course, everybody said that when gold started moving up last time, that was it. It was going to go up everywhere from then. So, everything comes around. And there's always another trade. If I'm wrong on this one, I'll find something else to trade. So I don't have to buy it. If I could see a better signal out there, again, total demoralization, total boredom, or total scaredom is kind of what I'm waiting for. So we'll see. When you call back the first of the year, we'll see how we're doing.
Sure.
Okay.
Yeah,
I appreciate it, Ernie. Anything else?
That's it. Thanks.
Okay. Thanks for the call, Ernie. It would be... had a question in the den out here. Will the caller guarantee we've hit a bottom in gold? You never know. Okay. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, market really not moving very far. Certainly not seeing a lot of volume as we get close to just 1 hour left in this trading week. 2.2 billion shares on the consolidated New York Stock Exchange tape. Like to seeing 4.5, 5 billion shares up at these highs to really make me think that we are going to have any kind of huge move into the end of the year. The quoted Santa Claus rally. What we have here is a very light volume move going into lighter volume, going into options expiration starting Wednesday. Probably going to see Wednesday as the last volatility day of this year. We're probably going to see volatility continue to shrink beyond that. A lot of people, if you can get some volatility maybe on Wednesday, maybe a good option would be to sell option spreads at least through the end of the year. If you can get anybody to buy them. Probably not a lot of people thinking that there's a lot going on out there. But interestingly enough, I've got my one short positions in technology in my daily newsletter. Really don't have a lot to say other than I think we're going to have a lot of positions here in the 3 weeks or less, starting the new year. But I'm glad we've got a few things. Anyway, we've got Mary from Erie, Pennsylvania. How are you doing today?
Hi, Dave. Fine. Just a quick question. I've got some money to burn, I guess you say, and I want to try a new newsletter. But I didn't understand the difference between the two products that you offer.
Okay. I have two newsletters. One is a daily newsletter for faster trading. The other one is an investment idea newsletter geared once a week to technology. So I have one that I'll trade just about anything. If it moves, I'll trade it. And that is a daily newsletter where I come out in the morning and then have a small wrap-up each evening. And then on the other side, I have that one that comes out on Friday where I'm looking for very long-term and big ideas. Some of the things that we've covered very early on are 3D printing, probably 6 months before it actually hit what you would find in the CNNs and Bloombergs of the world. Now you can't turn on either one of those without finding them, and that's what I'm looking for in that longer-term newsletter. But probably not going to be a lot of action in those. You can get a 2-week free trial of them by going to the front page of TFNN.com. But probably not a whole lot going on in those, probably in the next few weeks. So I hate to talk you out of getting it today, but I would probably say the last week of, have you tried one of the trials?
No, not yet.
Okay.
I'm not terribly tech savvy, and I was thinking maybe I could learn from your longer term play about.
I think you could, certainly. I do go by the belief of Einstein, who said, if you know a subject well enough, you can explain it to an 8-year-old. And there's not a lot of big numbers or anything else in the, and you don't have to figure out the square root of pi to understand my newsletter.
Okay.
They're broad-brushed ideas.
Well, that's what I was afraid of. I thought it might be too technical for a novice.
No, it's and I've said this before. You don't have to know everything about technology. I certainly don't, and I've been doing this forever. What you have to do is just be slightly better than everybody else. And we're over for the day. But
thank you.
Go ahead and get the sign up for that probably around Christmas, because I think that's when I'm going to have some really good ideas for you and look at some of the things that are going to be big winners next year. So it's going to be quiet for the next few weeks, I think. But you want to get that 2-week trial probably starting just before the end of the year.
Thank you.
Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.